All right, we are back.
How we doing?
Back on the happy hour. We don't have a fancy opening like we did last week.
The two faces for radio coming at you right now.
We are here.
Brand new week.
All
kinds of stuff going on.
Beautiful outside.
Busy. I'm a little tired, to be honest with you.
Oh yeah, I mean things. This is we're back to the anything can happen at any hour of the night or day in real estate.
Things happen. What I mean? Things happen quickly, don't they?
Absolutely, and quite frankly, I have not seen this crazy of a market in a very, very long time. Mark Gelman, the pride of St. Louis, is here with us.
Mark Carlisle's on.
Good to see you. Well, I tell you, I mean, it is nuts, and we got a lot to talk about. Hey, just got out with one of Birmingham's finest, Jesse Adams. He told me to give him a shout out. So,
there you go, Jesse.
Doing the Lord's work, taking the bad guys off the street.
That's right. He's a police officer, Shelby County, Jefferson County Sheriff.
Yeah, Sheriff's Department. Good guy, and we're going to get into some personal finance stuff. We're going to talk about obviously real estate as we always do. And, one thing I get asked a lot, because everybody knows I'm a big podcast guy. And so I thought, hey, we finally were having some questions from our listeners, if you will, or Facebook followers. Or
viewers.
Viewers, I guess you'd say. And they were asking about which podcast do I listen to on a daily basis. I don't know, you started listening, and so I wanted to share those with everybody. Yeah. And then also tell you the best podcast apps. The best podcast app out there is Overcast. You can get it in the App Store. Obviously, you can use Apple's podcast apps, but Michael Bruno, what's happening?
Yes.
Lisa True, the pride of South Florida. Anyway,
Michael Bruno is the pride of Mortgage Bank.
Mortgage Bank.
That's what he is.
He is that. But let's talk about the four shows that I listened to.
Barkley Russell's on. Thank you for coming in.
The four folks, the four shows that I listen to every day. The Clark Howard Show.
Okay.
Stacking Benjamins. Hey, you get it, don't you? Stacking the Benjamins
hundreds.
so you can throw them. But he also has Joe Saul Seahigh is the guy that runs that, and he has Money in the Morning, which is also good, and which is him. But in a 15 minutes, I listened to that first thing because it's 2 or 3 of the best stories of the day in the financial markets and that sort of thing. But as it relates to you personally, personal finance. The Afford Anything podcast, if you're going through this lady just breaks down personal finance and makes it easy to understand. And so Afford Anything podcast, and the one that a lot of you may have heard because it's the number one on Apple, which is the Bigger Pockets podcast.
Okay.
A good one. I think especially you can really hear, because folks are so freely giving on these type shows, these podcasts, because a lot of them are started by real people with real jobs. Yeah. Not some journalists who got into financial news and that kind of thing.
Yeah, a lot of good information. I know the Clark Howard Show is a lot of great stuff with personal finance and all kinds of things. He's originally started in Atlanta years ago. I think 87, he said.
Absolutely.
And so he's been doing it for a long time. And
he lives what he preaches, by the way.
Yeah, and it kind of reminds me of the Fox on Your Side. How they go out and
our local affiliate.
Investigate things that are going wrong. I think that's where he kind of cut his teeth was getting involved in some of those consumer protections and really diving in and making companies and other people accountable for stories that consumers are going through problems and stuff.
Absolutely.
Like that.
And so you learn something in every episode. I mean, I think they run about 39 minutes. Great. Listen to it at the gym too. Ralph, how you doing, man? Good to see you. Hey, big news, Netflix. Can you believe that Netflix is about to overtake Disney in market cap? You can explain a little bit about what market cap is.
Market cap is just basically the shares outstanding for a stock multiplied times the share price. Now, obviously, that tells you a lot about the company because that means that Wall Street's putting dollars into this company to get the share to that value. And then you've got big cap, mid cap, large cap, small cap, mid cap stocks, and a lot of different things that investors look at. So when you overtake a company like Disney, who is very diversified in, they own ESPN, they have the amusement parks, they've got
now Fox TV.
Yeah, they've got all kinds of shows, movies, obviously. So Disney's.
We know Disney. I mean, we've all experienced
Disney's
Disney, and the fact that this what we remember, many of us remember as a CD or DVD
DVD
by
company,
mail company is now, I mean, let's look at the numbers real quick. 146, it's worth, let's just put it in simple terms. We're going to tell you when we say market cap what it's worth to the investment community.
Right.
$146 billion versus Disney's $153 billion. I mean, heck, David, the stock up 75% this year alone. I mean,
and the funny thing is with Netflix, I remember when they had their first price increase years ago, however many years ago that was.
$6 to like $8?
Yeah, the first price increase. And I got because I was a Netflix subscriber, and I got the letter in the mail said we're going up. And I was like, oh, this is stupid. These guys,
won't happen.
These guys are dumb. I mean, they're going to lose so much business.
Uh-oh.
Shows you what I know.
Well, you were an early investor, too, in Netflix,
but
right?
then even with their online content at first, I was like, man, there's nothing really here to watch. It was like, the best thing I found was some old Scooby-Doo commercials, old Scooby-Doo cartoons, right? That was the best thing they had on there. But now they've got their own content.
Right.
They've got their own shows. They've got their own movies that they're working on. And obviously, they are one of the original disruptors.
And that has lasted. I mean, and you look at, Disney even, they own 30% of Hulu. I mean, so, and why this is fascinating is I don't think any of it, I think we kind of have all looked up and gone, they're a behemoth now. And you know what I really think? I think they're going to become they're going to become a stock that everybody's going to want in their portfolio long term. I'm not so sure you enter the Netflix now because we're at all-time highs with them, but I think for the next 20 years, not a bad investment.
Well, the thing is, I think the big thing that you're seeing with companies and stocks right now are who is able to maneuver and change and grow. I mean, look at Amazon. They started off as a bookstore, right, or selling books online. And now they do everything. Well, look at Netflix. They started off with DVDs. Now they're producing content. Now they have they're paying actors and they have shows,
their own shows.
Just like the shows that you watch regularly on the major
TV.
Networks.
Yeah.
I mean, now they're coming out with their own stuff. So they're evolving and they are staying current and they are adding new content and they're doing new things, I guess,
Well, and I think you and I talked about it earlier. We all in our own businesses have got to take the kind of the approach Netflix took and adapted to what they were given. They didn't sit there and fight it like Blockbuster Video did. Blockbuster tried to do what Netflix did, but they did it too late in the game. But
Netflix is staying relevant. Now they're big enough to throw some money at some ideas and do things with it.
Well, you're right. I mean, because they can make mistakes, which is the hard part.
But man,
right?
Some of the stuff you got listed here: the Disney World, the
talking about what Disney owns,
lines, Muppets, Star Wars, A&E Network,
Marvel Comics.
All these Disney products, and you've got Netflix that was just a Blockbuster competitor at first. They were just the little red box by the gas station, right?
Well, Redbox.
Yeah.
Well, they were like Redbox.
Yeah.
Well, no, I don't even. Does anybody really go to Redbox anymore?
I doubt it.
I don't think so. I never see them like I used to.
Right.
I mean, they went up on price, which mistake number one, because that was the reason I was going to.
Well, I thought Netflix
made
a mistake going up on price.
Ruby, how you doing? All the way from the Philippines. Ruby, hope you're doing well.
Tyler Young, hope you're doing well, buddy.
We are international, man.
Yeah.
We are international.
Rick Knox is watching us. All right, so what else we got?
This is the main topic related to real estate.
This is just, I just want to talk about this week because we've got a couple of situations right now where people, because of the market, how tight it is, obviously inventory's low. We've got more buyers than we have sellers. And
by far.
Right. So just in our business right now, we've got somebody that just went under contract. They're closing May the 7th because their house is selling May the 7th. So for the past week or so, week to 10 days, they've been a little bit nervous with their house under contract.
Inspections.
Knowing that they didn't want to have that interim time where they had to move into something else, they had to move their stuff 2 or 3 times, and then settle on a house. So they want to have everything happen the same day.
Right.
So what's happening are people are getting their house sold. They're putting their house on the market. They're getting a contract up for sale, and then they've got that time window to get out and find something.
If they have it,
and they're going out into a market where there's not a huge selection. So that's got to create a lot of pressure, a lot of stress.
Absolutely. And we're seeing it every single day. And that's why the best thing if you're a seller now is to have your agent negotiate a longer window, 45 days, something like that buys about 15 minutes. I mean, 15 minutes. Wouldn't that be great? Well, that'd be awful.
Yeah.
15 minutes to make a decision. No, about 15 days. 45 days of a 30-day closing window. That gives about really good assurances that we can find something. Because right now, you do have to wait. You have to wait until you are under contract before you can even remotely go looking for that house.
And I think that's another good reason right now in this market to
Darren James,
to get hooked up with a real estate agent, get hooked up with a mortgage lender, figure out what you're doing, because you could get out there early, right, and write a
we can
contingent.
write a contingent contract, but that's really not smart because you're not going to win.
Okay.
No one's going to see. We're even finding it hard right now for folks that are writing contingent upon the closing, a successful closing. We're past inspection. We're past everything, but it still must be contingent on the closing. And folks aren't going to take that chance if they have a similar offer, that same price.
Yeah.
They're not going to take the chance. Why worry about it?
So if you're selling a house in this market, I would say you need to get pre-qualified. You need to get pre-approved. Get your docs turned into the lender. Have all of that sitting there waiting. So once your house goes under contract, you're not scrambling around, going down to the loan officer and meeting with him and then talking about stuff, figuring out rates are 4.75.
What?
I didn't know that. And then my closing costs, and where's that going to come from?
Yeah, where's it going?
Well, I'm not sure how much I'm going to net. Well, what if I don't net as much? All these questions can be figured out before we get into the time crunch. So then all you got to do is focus on finding a house, writing a contract, and then the mortgage pieces, it moves really smoothly.
David, that makes too much sense, really. I mean, what we got to really do is game plan from start to finish, soup to nuts, right? Where we say, okay, here's what we're going to need out of this house. It may be 100%. I mean, it may be $100,000. It may be $20,000. But what must I have out of this house? Why is that important? Because when the offers are rolling in, we're not asking questions because you're going to start thinking at that point, oh my gosh, I got to have X amount, or what do I have to have in my new house? Oh my gosh, I got to call the lender. Well, no, you've done that already.
Yeah.
And we're ready to go.
Take some time to trust the professionals so you don't have to remember all these things. Don't do it on your own. I mean, you're not going to save any money doing it on your own because you're going to stress yourself out. You're going to miss something.
Absolutely.
And then by then it's too late, right?
Way too late. And I think when we're under stress, we make bad decisions.
Yeah, and I want to reiterate that the average process, I mean, typically we allow about 30 days, right?
Yeah,
for the closing process from application to close. We can get it done in 2 weeks, 3 weeks. There's a couple things that have to happen on the front end as far as the home inspection, the appraisal. Those are the two big things up front that we need to get rolling, get out of the way, so we can move on with the process. But really, 2 to 3 weeks is still very doable.
Well, absolutely. Well, 2 to 3 weeks, absolutely. But you got to make sure you're keeping in very tight communication with the lender. I'm speaking from the real estate side, saying because there's things that they have to do from underwriting standpoint that is time sensitive. And so as a consumer, you need to make sure you're putting pressure on your agent. Have you talked to my lender? Because I can't tell you how many deals have been pushed out because of that issue. And that's where we get back into those rocket-style mortgage companies where that communication piece can break down.
Yeah, the communication piece isn't there. And that's what happens when you do handle some of this stuff up front. When you're selling your house, you get it listed before you get that contract, before it's sold. Your loan officer's already looked at documents.
Absolutely.
They've already asked the questions. We've already played out scenarios. What if you don't net $50,000? What if you only net $30,000? What are we going to do then? So we've already figured all these things out. We're not scrambling around, highly emotional, stressful.
Absolutely. And really, here's the thing.
I think very smooth, a lot smoother.
And I think one of the problems that we found is that, one of the things that I've always liked about you is that you analyze everything. And this is not about us necessarily, but one of the things I've seen about you is you analyze everything. And part of the problem with consumers today is they get so enamored with, oh, it looks beautiful and I want the house. I don't care what it costs. But now we really got to focus on this stuff that really is dollars and cents down the road. And the problem is folks need to value that when they're looking for a lender, right? They need to value, are they giving me 2 and 3 options? Because I don't care what lender it is out there. There are 2 to 3 options every time.
Man, and you've got to make...
Hey, Brittany.
This is a financial decision. You got to make good decisions in life, right? And I know there are a lot of somewhat misleading statements in the mortgage business where, and a lot of people are just focused on interest rate, but sometimes that lowest rate is not
Hey, hold on just a
best
sec.
way to do
Hey,
it.
Brittany, will you text me your cell number? Because I don't have your cell number anymore. I was going to text you something the other day. Anyway, this is a great way. I can't talk to her any other way because I forgot her cell phone.
All right, Brittany, get us that number.
But not here. You can
Not on
hit
there.
my cell.
So I just think that, look, interest rates come from the same place, Wall Street, right? Everybody's looking at the same money, at the same rates.
Absolutely.
Now there might be different margins from company to company. There may be slightly different rates from day to day, but you're usually pretty close, within an eighth. Everybody's playing
Generally the same.
Everybody's playing the same game.
They're within the same guidelines.
Yeah. So the big thing comes into how much time you spend figuring out what's important to you about the mortgage.
Absolutely.
And looking at the fees.
Hey, Chrissy.
Man, I can't tell you how many people know what rate they were quoted from another company, but they have no idea what the closing costs are. Well, so it's just a big deal. There's Sarah Adams. We already mentioned Jesse.
Jesse made the front page of the
front page
start of the hour. But anyway, all right. So, but that is so important that the lender have a game plan, and if your lender can't tell you what are the 2 and 3 options within whatever I'm buying, because I look at options like, I am going to have to pay PMI. Okay, great. Now there are 2 options within that.
How do we do that? How do we want to set that up? How do you want,
lender paid MI?
What does it matter if I do lender paid or monthly? Why would I do one over the other?
What's the break-even point?
Yeah, so let's figure that out. I tell everybody, by the time you figure out you're with the wrong lender, it's too late. I had a guy call me on Monday working with a different lender. He was PO'd, but there's nothing I could do. He closed this week. There's nothing I could do about it at that point. He's got to stay where he's at. He's got to play the course and deal with what he's got, because you can't just all of a sudden stop and start over, right?
No, and by the time it's too late.
Yeah.
Because I've always said that it's the total cost of the loan that matters, right? So when you're looking at it used to be the good faith estimate. What do y'all call it now?
Closing disclosure.
Closing disclosure. Loan estimate. Well, it was too confusing when we said good faith estimate, I guess. And that's why your documents now went. Everybody's package went from package meaning loan package, just so you know. From here to here. You know what I mean? And
a lot more documents.
I mean, just they have to tell you what they done told you.
Right.
So anyway.
So that's all about making a good financial decision. Now we're going to transfer into some poor financial decisions. Okay. I was at dinner with somebody last night. They mentioned a story on NPR about payday loans. If you guys don't know what these are, payday loans is typically a short-term cash loan. I don't really know or understand a whole lot about the reason people get them, but I know obviously a lot of people might live paycheck to paycheck. Okay, so let's say your car breaks down.
I think a lot of people do now.
Let's say you need $400 or $500. These payday loans are designed to be less than $500, so you can walk in and get cash, and then you authorize a check or a debit in 2 weeks, or
you pre-write a check.
Yeah, they're from 10 to 30 days, and so you get the cash and you pay the interest.
Absolutely.
Now, the unbelievable thing about these is that I was researching some companies. The average, I think, APR
total cost of the loan
456%.
456%.
Your annual percentage rate.
What a deal for them.
They said that an average of 8 per year per person. So
look, I'm a capitalist, but these companies should be ashamed of themselves.
They are really ripping people off.
They should be ashamed of themselves.
Now, the funny thing is
but nothing I can do about it.
They just tried to put in some regulations, some legislation to limit the number that they could extend to people, as well as more analysis on the ability to repay.
Well, and where are they located? When I see them, they're located near the people that are least needy. I mean, they're needy of it, but they can least afford to pay. Well, first of all, let's start off. None of us can pay 450%.
It doesn't make sense. I mean, I was on CashNet USA. A 10-day loan was 639%.
And they're
APR.
advertising it?
Well, they have to. They have to put the numbers out there. So basically what you're doing is you're paying, let's say you're paying 20% for 10 days. Well, if you divide that out, then you look at a daily interest rate, and if you do it by 365 days, that's how they're getting these big numbers. So I do agree.
Hey, somebody's making comment on our shirts.
I do agree that the APR is tough to compare, but you're still paying a ton of interest, and it's just ripping people off. A lot of people are going in, and if they can't afford to repay the loan, they get a new one.
Oh, it's funny you say that. One of the stats I saw was that Pew Research, it was Pew Charitable Trust, actually, said that the average payday borrower takes out 8 loans of $375 and spends $520 before they even pay the first note back.
It's unbelievable. I looked on a few websites. Lendup.com, APR 458%. SpeedyCash.com, APR was 199.5. Now, this example,
crazy.
This example I printed out. Speedy Cash was a $400 advance. The finance charge was $269.
Hold on, what was the original amount?
$400.
So $400, and they're going to pay $270 in fees?
In fees and interest.
Over what time?
So get that. This was over 6 months. So your total payment back is $670. You borrowed $400, and you're paying $670 back. That's 199.5% APR. I mean, it's just it's complete
crazy
and total ripoff. Now, the funny thing is some of the politics involved in this is amazing. Mike Mulvaney, the guy, I think Mick Mulvaney, I'm sorry.
Yep.
Yeah, Mick Mulvaney, the guy that just took over the CFPB, put these new regulations on hold.
Why?
Because he has recently or previously during his run into office had donations from some of the payday lenders to support his campaign.
Well, I'm shocked that a politician would.
He also dropped.
He should be ashamed of himself with these guys, though.
He dropped a lawsuit against the payday company, charging 900% interest. I mean, this stuff is crazy. The annual conference is going on right now. That's why it's a big deal.
Annual conference.
The annual conference for some of the
slimeball,
the heads
lenders
of the payday loans is being held at the Trump National Doral Golf Club. How ironic is that?
Well, hold on. Trump doesn't. Come on. Well, they may be supporting Trump because I think capitalists do, but I'm against him, and I'm sure that the Trump National Doral will take anybody's money. I mean,
of course. So moving on. I mean, we've got. I looked at Advance America. They had a loan at 456%.
So crazy.
CashCentral.com. Now, I did get on a little side note here. This was an installment loan. Okay, this will blow your mind. You borrow $2,000. You make 24 payments of $310.86 a month.
Do the math for me.
That's a total of $7,460.
Of how much?
You borrowed $2,000 and you're paying back $7,500.
Awful. If you know anybody doing payday lending, or if you know them,
they're making a killing. 180% APR. I mean, guys, it's just.
Don't do it.
It's just a ripoff.
I know, and we're talking about it because we're hearing these stories of people. I mean, what's funny is I think sometimes that the economy is doing well. But for who, right? The stock market's doing really well. We aren't seeing quite the increase in salaries and in wages like we want to. I'm not saying to go to minimum wage increases.
But if they're allowed to do things like this is obviously taking advantage of the people
that can least afford it.
That can least afford it.
It's like my thought on casinos. Only in Alabama do we allow fake bingos that are supposed to be slot machines. Right? But God forbid we allow blackjack that's 50-50 chance.
Yeah.
Or even a lottery. We won't let a lottery.
Now, I did want to add on this. The payday loans, I think it was George Bush that signed a law way back when that said these are not allowed to go to military veterans. Like military veterans are not allowed to get payday
How are they going to
loans.
know that, though?
I don't
Where are you going to go? Oh, you got a tattoo?
I don't know.
Of an anchor?
And also that they are outlawed in certain states. North Carolina, New York, Georgia, Montana. Great state of Montana.
I hate getting involved in between a capitalist and making money. But sometimes it's just awful. What did Darren James say? I'm going to ask to work for cars to get a raise. I asked my boss here for a raise. And she
gave me a step ladder.
Yeah. That's his wife. Darren James, there's no doubt.
Hey, you got to step up.
Darren probably doesn't even make $1. It all goes to mama. I know Darren well enough. He's the pride of Louisiana. Denham Springs.
Denham Springs.
Yep.
He might know Christy Solar.
Do you know Christy Solar,
Rachel
Darren?
Kelly's checking in.
Anyway, we're going to move on. We're going to move on from
When she's not returning clothes for people? Go ahead.
Who?
Oh,
Darren's
go ahead.
wife or
No, Rachel.
No. Darren's planning his big trips to Disney World. I mean, the guy is the most masculine man I've ever met. Used to guard the governor, right, of Louisiana.
Oh, he does know Christy Solar. She is wonderful.
Oh, he knows her.
Oh, yeah, she is. She's one of my favorites.
Let me tell you about Darren, though. Biggest Disney fan, and he's the most masculine man I know. I'm like, Darren, I don't like it like he does. But he's like, oh, man, you got to go
Now
here.
you have to flip over to Netflix, right?
That's right. That's right. You got to go to Netflix now that they're taking over. All right, let's talk about one thing that I get asked a lot, too, because everybody thinks I travel a lot, which I guess I do a little bit, just a hair bit.
A little bit.
Yeah, about, a lot of folks are asking, if you leave the country, what do we need to do about travel insurance? And this is a personal finance issue, right? Because it can severely impact us relative to our finances if we get sick while we're in Mexico, Canada. See, folks don't understand that a lot of your insurance policies, most of them,
don't cover you there.
They're not going to cover you. And one of the best things...
That was actually one thing he told me to do. We went on a cruise last year, a couple years ago, and paid $50 for a Geo Blue.
Geo Blue.
Geo Blue. And so that covered me.
$1 million.
Didn't use it, but...
Look, here's the thing, and I'm going to tell you about... for instance, we're going to the Philippines this summer, and we're going to be spending... Well, Philippines, Singapore, and some other places.
We're not.
No, we're not.
He is.
Yeah, I am. And as a family, one of the things that we're doing is we made sure for less than $100... Less than $100, we have $1 million worth of coverage for no deductible, and really they'll cover anything. And they're direct payers too. They'll pay the hospital or whoever we have to go see directly, and they'll fly us out of there if we need to. The other thing is the Chase South.
Hey, Jennifer Castleman.
Yeah, she's in the travel business. She knows.
Yes.
Here's a copy. Good thing now you can't see the number anymore because it's on the back. But the Chase Sapphire Preferred Card. It's why it's my favorite. It's $99 a year. But what you won't believe is the amount of trip insurance that the credit card gives you. There's no need to go out and buy a third policy. That's why you were able to buy just the health portion of that. And for $99 a year, if there's trip interruption and cancellation, and it covers you up to $10,000 per trip.
Yeah, and I'll tell you, this is another thing we kind of touched on, I think last week on the Clark Howard stuff, was he was talking about some of the benefits of putting stuff on credit cards and flights, and specifically vacations, cruises, things like that.
Absolutely.
To protect some protections that are built into credit cards that people don't even realize.
Well, they say people, everybody out there, a lot of folks are saying, oh, I don't want to pay $99 for a credit card I can get for free.
Right, yeah, that annual fee.
But trip delay reimbursement, if it's delayed more than 12 hours, they're going to pay, or an overnight stay. You get stuck at Midway Airport and you don't have a thing, they're going to pay you $500 worth of your expenses, right, that you incur. The trip's canceled by sickness, severe weather, and other situations. Unlike the stipulations you have, these guys cannot afford to run a risk of losing customers. So they have pretty good policies in place. And everybody that I know that has made a claim, really good at getting it paid out.
Yeah, that's good.
So there's that. And also, one of the best things about the Chase Sapphire Preferred is that when you rent a car and you use the credit card, they are the primary insurance on the car. Meaning, if there's an accident or something, you don't even have to even talk to your insurance.
They'll take it. Yeah.
They'll take it. And you don't have to worry about your rates increasing. And so you go $99, not a bad deal. So
Excellent.
There's that. So Geo Blue for help portion of travel.
Yes.
Chase Sapphire Preferred. And there's some other reasons. And there's some other cards. Just so you know, in case anybody's interested in this stuff, some of the other ones besides the Chase card would be the City Prestige card that has the same thing, Chase Inc. business, and then, of course, the Platinum card, which is a really good card from American Express.
There you go.
So,
and that's the rundown for
That's
this
it.
week. We're gonna have to start some changing.
We forgot to
up
tell you
the-
about what kind of beer we have.
Yeah, it's a little Abita. That was a purple haze. And then I had a strawberry.
Strawberry.
For
Hold on,
Claire.
you
He
give me
likes
the girly
strawberry.
one.
He likes the strawberry.
What's up with that?
But another beautiful week.
Absolutely.
The market is busy right now, so if you need any help with anything, give us a call. Look us up on Facebook. Most of you know us already. Shoot us a message. Be happy to help you out, and got a bunch of likes coming in. So,
well, thanks a lot. And you know what? We'll see you next Thursday, 4:00, and hope you all have a great weekend and great start to next week.
yes, thank you for tuning in.
See you later. Bye-bye.